Well, hello guys. Good afternoon from here. Hope you guys are doing fine and hope your holiday is going well. If actually you do have a holiday, but it's the Christmas season. So yeah, actually I know I haven't been active on YouTube, but I've always been active on my Facebook page. It's the same name as that of my YouTube channel, Demitron FS Trader. So yeah, today I'm gonna be talking about the market structure and everything and how you're gonna do your analysis when you're looking at your chart and executing a trade on your chart. So yeah, we all do know that before you start doing your analysis, you should actually start from your higher time frame. And this your higher time frame will actually tell you if the market is bullish or it is bearish, and you actually get to predict where the price is actually going to run to. So yeah, first of all, we start from a higher time frame and you zoom out to actually see what the market has been for a long while. So let's just use gold for example. As we can see right here, we know that gold is actually bullish and there's no sign of it being bearish, right? Like you can actually see that. And how do you get to spot your market structure? And this is something that is very difficult for most traders to actually find out, right? Spotting your market structure. So right here, we do know that gold has been bullish, and first of all, you start making your structure. You have this high right here, and also we have this low right here. So when marking your market structure, you should actually find an area that has an impulse, swing high and swing low, and you should actually know when you're having an imbalance, and you get to find an area of order blocks, supply or demand, whichever you choose to call it. So yeah, we do know that when the market is bullish, we are having what? Every high is a buy stop and every low has a sell stop. So if the sell stop has to be protected, that means every buy stop will be taken out, right? And the sell stop will be protected until price decides to change its direction. So let's say like here, we are having a bullish structure, higher highs and higher lows, higher highs and higher lows, right? So we do know that every high has a buy stop, which means there is a stop resting on those highs, and every low has a sell stop. So we level the high as buy stop, and then we level the low as sell stop. So for the market to be bullish, like sorry for repeating the same stuff, every sell stop will be protected and then the buy stop will be taken out. So yeah, and in that area of sell stop, we get to find area of fair value gap, and we have an area of order blocks, or most people will call it demand. I don't know which anyone you choose to call it. You can call it. I call order blocks demand sometimes, depends on when the word comes out from my mouth. So yeah, as we're having the sell stop and buy stop, we know other blocks will be here for market to push higher. But for you to confirm that, what will you get to do? You have to do your analysis before you know that the market has to be bullish or to respect your particular point of interest you'll be looking at. So which is what? You have to see a fair value gap, you have to see a demand, other blocks, and then you know how the smart money works, you know how the institution works, and that is what they grab liquidity to do what? Supply to or distribute to another liquidity, you know, a draw to liquidity. So yeah, that is it. And you know, understanding of the algorithm, what the algorithm does is what? It creates imbalance, it creates liquidity to take that liquidity, and it creates an area of what? Blocks. Alright. So now if we are to buy from an area of demand, we have to see an imbalance, which tells you that yeah, the market or the algorithm we have to balance that certain price area, and then get to an area of demand or other blocks, which it has to do what? It has to create a liquidity, that to grab that liquidity, the stops of retail traders. Sorry about that. I'm not saying retail trading doesn't work, but smart money concept helps you understand everything about the market, how it operates, and how the direction, and you have to get a bias. Okay, when you're trading with the smart money concept, you actually know how you're going to place a stop loss, and you actually know how you're going to have a confirmation trade. All right, so since you have liquidity, we have people in the market, the retail and the institution. I am a retail trader. I am not an institutional trader. I just follow the footprint of what? The institution. That is why it is called a smart money concept. There are traders that find out an obvious area or a place where the institution get involved, and they try to also get into that area to ride the market with the institution. All right, still yet I'm a retail trader because I don't trade with hedge funds. So yeah, so they grab liquidity, they use that liquidity to activate their orders, right? And when they grab that liquidity, what or where will the price has to run to? The price has to run to what? It has to be drawn to another liquidity. So when you're doing analysis, before you execute a trade, you have to find an area where the liquidity has to be grabbed, tap in your point of interest, and then you get to find what? An area where it will be drawn to. That is a high probability trade. Sorry. And how do you confirm? How do you do analysis based on the drawn liquidity? You have to see a double top equals area where you have equals resistance, support. In the case of buying, you have to see resistance, which you know is a liquidity pool, and also you get to have what? A sell side imbalance, right? Because you do know the price, you have to fill in an imbalance and distribute to liquidity. So yeah, and after all those steps, you know you have to take your profit on a high, because it's obvious that it can not break the high. All right, so you have to be taking your profit on an area of imbalance and an area where you have liquidity, right? So you know we have your types of trading: swing trading, scalping, and day trading. I love swing trading because when I'm swinging, I can like take a break off from the market and do some other things I have to do. So yeah, now after you see your structure on your higher time frame, you have to do a run down to your lower time frame to get a confirmation trade. And how will you get to see your confirmation trade? You have to see the price creating what? A structure. All right, because if the market is bullish on the lower time, on the higher time frame, then on the lower time frame it could be bearish, right? So you look for an area of demand on the higher time frame. You have to create a structure, and you have to see a stop hunt, and after the stop hunt, you have to see what? A change of character or an order for realignment. It has to realign with that of the higher time frame, right? So changing character, create liquidity, also grab the liquidity, tap in your area of demand of the block, and then you can successfully swing your trades, right? So now also to confirm that the market change direction is all done on your what? Higher time frame. So assuming we are let's just say we're having a series of higher highs and higher lows again. So we now see low and we see a high, then the supply could be formed right here, or you get to say a stop hunt. You know, a stop hunt is where a wick just trade past a high and closed below the candle closed below the high that the wick grab the liquidity from. The stop hunt, and you only confirm that only if you see a change in character or the break market structure. So the market has changed trend, thereby breaking a demand that was supposed to push the price higher. All right, so you confirm this with a higher time frame when you see change in character, price tapping into your area of supply, and then you secure a trade. All right, so everything you have to confirm should be on your higher time frame. All right, on your higher time frame. The lower time frame could be noisy, you might not get a clean confirmation trade. All right, so yeah, that is it. So now we are looking at good. We have a higher high and higher low, and we now get to see another high created right here, a high right here, and we do know it traded lower to create a low right here. So this is my structure, and price did what? Traded higher to do what? Break the structure right here. So now the monthly time frame seems to be very compressed, so you can like go down to your weekly, and the only thing I love doing is to always look at my daily chart, because the daily chart gives me a clean trade. All right, so before then we don't know that the price right here on the daily chart it not actually creates a structure. We do know this is a range market right here. So also after the break on previous high, it created a relative high right here on gold. So we move down to our weekly charts right here. Move down to our weekly chart, and I know most traders might see this as a structure, but to me, I'm not seeing it as a structure because what I'm seeing here is that the market is on a sideways, right? You can actually see that the market has been on a sideways, and every other thing you'll be seeing inside here is not a structure. Something you see right here, and you see right here, you think these are high, lows, stuff like that, but no, these are just a raging market, because right here we don't know this is a high right here, and that high traded lower to create a low right here, right? Then you trade it higher, we do not break any structure, but what do we have? We have a relative high right there. And during analysis, you get to observe right here the price created what? Support right here. So we know it created liquidity area right there. So I shared this stuff on my group long time ago that we have liquidity right here, and this is not a structure. So everything you're seeing here, I know most traders might see this as an area of what? Supply. You have another block right there, you have another block right here, I will call that the supply, and most traders will try to sell from here with the expectation that you have in what? A supply, but we can see that it failed right there. Now what is the reason? First of all, this is a range market, price traded lower to grab liquidity on what? Support. So if you observe on your weekly chart, you can see an internal structure that was forming right here, where we have this high, and then we have this low, price traded higher again, we have this high, traded lower, we have a low right here, and then it traded higher. This is where it created that high right here. All right, so this is my what? Structure. Even if you like put it on a line chart, you can actually see your high, low, then this high created, and then price starts to consolidate right here. You can actually see that is a ranging market. So back to the candlesticks, and if you observe right here, when price broke the structure, like I see, we have area of support right here, and if you observe, we have this demand zone right here, a little consolidation that occurred before a structural break. So we did know a break from a demand, from the area of supply. So it is a supply and demand flip. A demand from here because it did not get to sell from that other block, so it formed right here and it broke structure right here to create what? A new high. And since then price has been ranging, though you could actually get a trade entry right here. Okay, so now what do we see price do? Price traded lower, grabbed what? An area of support. So like every other smart money mentor will teach you, and every other smart money trader will tell you, they grab the liquidity to do what? Activate their own orders and use that liquidity to do what? To take out another area of liquidity. That is just how the algorithm operates. So it grabbed what? Support right here, grab the liquidity, tap into an area of demand, and then we see the price supplying higher, right? Okay, see the price just trading higher. So now let's talk about the confirmation trade entry. So right now we run down to our daily chart, and we get to see how it looks like on the daily chart. So right here we have that other block right here, the last then candle that occurred before a structural break. So yeah, so like I already told you guys that if you get down to lower time frame, you get confused. Like I said on the weekly chart, that price broke from an area of what? Supply, and we can see this is the other block right here. So it tapped into the area of other block with the expectation that you have what? A single break of structure. Like I always told everybody that chat me up, that a single break does not confirm a change in trend. It is only when you get to see two breaks you tend to confirm a change of trend, because you have to see what? A change of character and then a break in market structure. You not confirm that a strong change is about to occur, but a single break might be that you just want to grab liquidity and then trade higher, and you could possibly trade back to your area of demand that is below and then trade higher. So when you see a single break, it does not actually confirm, unless maybe you get to see the price tap into that area of supply and it breaks the low again. then you will not confirm that, yeah, the price is actually changing to what, bearish. But what you get to see here, we see the price tap the area of the block, traded lower, which is what, a sell and a bought. So we're having a supply demand flip right here. So price tap into the area of demand. Now how will you confirm your trade? So we roll down to the 4-hour time frame and we get to look at that. All right, so now this is where most traders get confused, because they don't actually start their analysis from where, from the higher time frame. They are all looking on what, the 4-hour time frame, without knowing the directional bias from what, the higher time frame, because the institution always tends to trade the higher time frame. And so right here, most traders will be like, this is a low, this is a lower high, and we have a lower low. Then we traded lower again. I'll call this a lower low right here. I'm not seeing this one as a structure right here. Price just consolidated from here because this is the high created, and then we have what, a break of structure from this low, right? So this way traded into the area of demand after consolidation. So now most traders will be like, yes, there's a supply right here in which price traded into. So also those that trade the full market cycle will be like, this is a consolidation and we have an expansion. You'll be expecting what, a retracement back to the area of what, imbalance, and then an area of what, of the block. So I mark that right here, and you see what actually happened. It traded into what, the area of what, other block right here after the consolidation, expansion, then reversal, expected retracement, but it was violated, and this is the area where we have what, a break of structure on the high. All right, I do know that this is a hidden base, like a supply zone right there, but I don't trade, actually look at this stuff, like, based on it's not the current one that breaks structure. All right, so I'm only trading the area that broke the structure and not things like the 50% or so, like that. So right here, like I said, if price will tap an area of demand or a supply, you have to see a stop hunt plus what, a change in character. Possibly you get to see a QML. All right, and I love trading QML. So right here, we know we have a little structure forming that area of demand where we have this break right here, and you see how the price impulsively traded higher and violated this demand right here, this supply right here, and we now have that change in character. But first of all, we have an internal structural change right here, so we call that a minor change in character, and then it traded higher. We have that major change in character, and QML was here, so we are now having a stop hunt plus what, a change in character. So I mark this as my QML, and those that follow me on Facebook, they do know I trade QML. So also we now have the demand created on what, inside our higher time frame demand. So we now have that other block right here, right there. So now price traded higher and tap into an area of supply, right? It did tap into an area of supply right here. So after it tapped the area of supply, we see the price traded lower and tap what, again tap our demand. Now it traded higher. It did not actually give us a break of structure, okay, because this right here you're seeing right here, it is not a structure, it is a compressed liquidity or a compressed structure. And like I always say, you have to see liquidity as you have to consult your liquidity assessment. Right here we have support, the same thing that occurred on the higher time frame we occurred in the lower time frame. So we have liquidity there, support, and we have trend line right there. So price did what, grab liquidity, and what do we have again, an internal structural change. We have stop hunt, tap into our area of demand, and what we have, what, a break in market structure right here. Now after that break in market structure, I would like to expect this high right here to be broken right here, but seeing this one is also an extra confirmation, right? Though I can see that it can hit your stop loss right here, because it's very obvious for gold to do that. So price traded into tap into the order block, and I know those placing the stop loss on the low of the candlestick will be taken out right here. Okay, so depends, because I know this occurred during the news event, I think so. So now, like I said again, liquidity assessment, we have liquidity right here, we have imbalance, we can see we have two candles that broke the structure, and we have that imbalance. So what is your draw to liquidity? My draw to liquidity is this area of what? Resistance. So that will be the area where I might be willing to take my profit. And for a long time on the swing trading, we are looking for what? An area that has liquidity, because right here I can see we do have liquidity resting right here, right? So also we do have an extra liquidity resting right here, right? We can see we have area of support and resistance right here. So you can see price has a confirmation entry, tapped into area of demand from a higher time frame, and confirmation trade occurred. But then I know this one hit a stop loss, but most traders, manual traders, might place their stop loss few pips below the candle, because most times we get to see the price tap your stop loss and then right away from the other block, and then we see the price how it's been relying, how it rallied higher, doing what? Grabbing liquidity. Still here, I can still say this whole thing that I called here is just liquidity, trend line and stuff like that. So our supply, oh my god, so our supply again was violated right here. Most traders will want to sell from that area, but why are you selling from the area when you don't have what? Your confirmation, you don't have a clean imbalance, you don't have liquidity assessment, you even have liquidity above you. You should not have liquidity above you. You should not have liquidity above you, or you should not be in an area where you are having liquidity. It is a low probability setup. A high probability setup is maybe an area, mostly I love seeing an area when I have a stop hunts plus a break in market structure, because the reason why I love seeing something like that, because I know we're having high, low, then sorry about that, we are having a high, we have a low, we have a high, we have a low, and we have a high, which tells me that this liquidity from here has been taken out, right? And then we now have what? The price change direction. So we are doing what? The price is doing what? Grabbing liquidity from two sides, right? It grab liquidity from here, and this one is now what? Protected, and then we're having what? A structural break. So two liquidity has been taken out. And most times I don't actually trust this one, where we have a failed high and then a break in market structure. The reason is because I'm having buy stops resting right here. Okay, I'm having buy stop resting right here, and even though I know this is a what? Shift in market structure, I'll only confirm a shift in market structure for this reason. Now, what is the reason? If this high right here has an imbalance, okay, has an imbalance, probably an area of supply right there, and it's round to fill that area of imbalance, or a supply zone and it breaks structure, that is when I'm willing to say this is a shift in market structure, and I'll be trading from there. But if this market traded higher and we have equals, we don't even have an imbalance right here, I am not taking that trade. Okay, so I love trading when we have a stop hunt plus a break in market structure and a return to other block. All right, to confirm a shift in market structure, or I will get to see a diamond pattern, but diamond pattern is very, very rare. Okay, so now where is the price drawn to? Looking for our daily chart. Like I said, all this year our liquidity, there is no confirmation trade, sorry, there's no area of supply price could retrade from, and we do know we're having what? Area of consolidation right here. So where is the price going to trade higher? I'll be looking at this relative high right here for price to trade back to that area, but it could be obvious. We actually know what the algorithm we plan to do, because I do know and see we can that the market is creating what? Liquidity right here, and based on the festive season there is not much volume on the market, that much, so it's obvious that the price could do what? Trade lower again, since we have break on this major high right here from our daily chart. So it could want to trade lower to fill an imbalance right here, and then fill in an area of demand and continue higher to do what? Grab liquidity from the high. All right, so that is actually how you get to do your analysis and how you get to find your market structure. So now we look into GBP USD to see the same trade. So I'll delete everything from here. All right, so we can see from GBP USD the price is actually bearish, but then you can see we have a consolidation right here before the price continues to sell lower, and it created what? Another consolidation right here to trade lower. All right, so we can see we have a break in market structure right here. So since we are having a break in market structure, we do know the price has to trade back up, right, to what? Trade into area of liquidity. So on GBP USD, I think the price we trade on liquidity that we're having here, like if you go to your 3-month chart, you can actually see it from here. 3-month chart right here, we have this consolidation right here. So price will come to that area to grab that liquidity. The question is when. All right, so we have liquidity right here, and based on the market structure, we do know we have a high right here, and price traded lower. We have a low right here, and what do we have again? A high was created right here, right? So we have a break of structure right here, and it's expected that the price should trade lower to area of demand and to buy, continue buying. But then we have that impulsive move that traded lower, breaking structure, and do know that it all started from where? This supply from here. And when we have that break of structure, you can see we are having what? A fake out zone created right here. So a fake out zone is actually an area of support or resistance created around your supply or demand. You can call it an order block. So the same thing for this area, we have a fake out zone. So most people will look at this and say this is a structure right here because we have a break of structure. But what are you trying to trade? You should be very observant of what? Your institutional order flow. All right, now what is this institutional order flow? The institutional order flow is that we're having an area of sell side imbalance or a buy side imbalance or a liquidity void. So the algorithm we have to do what? Trade to do what? Fill in that area of what? Imbalance or a void. Now looking at this, you do know this created liquidity right here. Most traders will be like this is a lower high and lower low and lower high, but I am not calling this a structure because of what? I'm having a fake out zones. All right, and there's no trade to be executed right here. Like looking at this, you don't know your liquidity, so this other block you'll be looking at might not possibly hold. Okay, and also this area of supply you're looking here could not possibly hold. What are my reasons? Is because right here we don't have area of liquidity assessment to look at, and we do know we're having a relative high right here, right? So this actually did like some kind of a stop hunt right here. So we only get a confirmation trade to see if this area with respect to sell on the lower time frame. But looking at this, I'm not be looking at this area. I'll get to see price trade higher to fill the liquidity void right here. That is just how the institutional order flow operates. And if you also look at the 6-month time frame, you can actually see how clean it looks like. We do have this order block right here, and that demand right here, we say it happens to be a breaker, right? It happens to be a breaker, but I've never traded a breaker or a mitigation block because sometimes you get to see the price trade higher to what? QML. So a failed breaker is what? A QML. So supply right here and liquidity void right here, or sell side imbalance, and then we have in that area of supply right here, which is an indecision candle, they're responsible for what price trading lower. So we run down to our what daily chart. After we are seeing our analysis from the higher time frame. So now we start to spot out that of what the daily chart. So we look at our area of what imbalance, this other block, which is not going to be valid, and so we now get to start plotting our highs and lows. We have this high, and then low. We have this high, and price traded lower right here, and traded higher right here, created liquidity right there. You can actually see the liquidity right there. So traded lower again. We now have this low right here. Okay, so this stop is what right there, and traders, we see this as an area of what supply, which I won't see that as an area of supply. Okay, so now what we get to see right here, price traded lower and it traded higher to do what? You can see the impulsive move right there, and it created a high right there. So after a high, it traded lower to create a low, and then we see it trade into that area of what? Of the block that we have on our daily chart right here. So now some traders also, we see this as an order block, but why are you looking at this as an order block when you do not even get to see it break a low, right? It did not break a structure, so why will you get to see to sell from this area of supply? The reason is because you are not focusing on your higher time frame. You're just looking at your lower time frame, possibly 4-hour time frame, and all these weeks right here we get to form a structure, and you think you have the break of structure, but from your daily chart there is no break or structure right there. Okay, and I can observe, looking from my daily chart, that I'm having what? Equals right here. So the candles are equal, so I do know that we're having what? Liquidity at that area. So now we run down to 4-hour time frame, 4-hour time frame, to actually see what the market presents. So we look at the 4-hour time frame, and normally you mark this as an area of supply, which is not actually clean to me. And what are my reasons? My reason is because I'm having area of what? Liquidity right here. So yeah, and some we look at this week has what? A supply zone, and you will say this here did what? A break of structure. But you're not focusing on your higher time frame, because on the daily chart I don't think that is a structure, because if you observe, I marked the what? Primary structure, which is our highs and lows. Okay, so now the secondary structure, or the lower time frame structure, macro or micro, I don't know which is which. So right here, price traded higher, like you can see our mark on the daily chart is actually an equal right here. We traded lower, fill in an imbalance, traded higher, right, and it took our liquidity right here, though it decreased the fake zone right here, and it tapped into the daily time frame of the block, traded lower, and if you observed right here, we can see after it showed imbalance, we see this traded into an area of what? Demand. And what did that demand do? The demand broke out of what? An order block. So is a supply and demand flip right here. This is our order block, so we're having a supply and demand flip. All right, and it took out liquidity from here. So from a 4-hour time frame, you will say this is a lower high. We now have a failed what? Low. Price today higher, broke the structure, tap into the daily supply zone, and you can see the daily supply zone gave us what? Liquidity. It did not give us a confirmation trade to say that supply is a valid area. Okay, so now price traded lower, we have an inducement right here, and price traded lower, tap into that demand that violated a supply zone right here, because you can see that price has been respecting auto blocks right here. So it flipped from that area, broke out of it, and also some fake areas of what? Auto blocks, tap into the demand and supply flip, and it went laterally. We have imbalance right here. It broke a structure right here. So price did what? Came back to our area of what? Demand, right? Which has imbalance. And also I do call this what? A KML. So why am I calling this a KML? I can see lower time frame structure right here. Low, high, low, lower high, lower low, lower high, lower low. Then it changed in character and the break of structure. This is my KML. And we have area of demand right here is an extra confluence to confirm my entry. So and most traders on social medias and Instagram, flipping markets, what is the other guy's name? Um, um, fractal market, yeah, they took this trade also, and some other traders. I'll be following you on social medias also. So I saw I do see a lot of people update. Yeah, I do see updates and I do follow a lot of people. Yeah. So I'm the type of person that I don't have this mindset that I'm a trader, I don't have to follow other traders. No, I do follow other traders. I learn from every person I see that is perfect on social media. Like I follow them and I was like, wow, this is a good entry, and I document every of that trade. Alright. I'm not perfect. Nobody is perfect. The market could get confusing and you might be puzzled about it. Okay? You might get puzzled about it. So the only thing there is just for you to study your charts and you understand a lot of things. Okay? So I follow everybody. Okay? Both YouTube, both Instagram, both Facebook. I follow a lot of people and some, to keep myself busy. I follow Binance, Bybit, and every other stuff. I follow everybody. They are perfect. That are very, very perfect. Every traders are very, very perfect. Okay. So yeah, we learn from everybody. So price tap into the area of demand, and it rallied higher. Now right here we have the ICT ultimate trade entry right here. So did not it tap into the area of demand, and it rallied higher. Though I don't trade something like this because it does not meet my setup. Okay, I have my own setup that is good for me, and I do know we have this is supply and demand flip right here also. So these are things that I don't trade because it doesn't meet my setup. Okay, so I rather stay away from it. Even though it might play out, I'll rather stay away from it. Okay, so we have a supply demand flip right here. Price tap into the area of demand and it rallied high again, and we can see how GBP USD has been trading, and right here the market has been ranging. So if you go back to the daily chart, you do know that is trading lower, but then we are having some sort of liquidity assessment right here. Okay, so it's a trade line stuff. So it could be that the market wants to reverse for a while to grab liquidity, stuff like that. So we do know it also created an area of equals right here. So maybe you might want to do a stop hunt and then trade higher, but then you can see we have an order block right here that also did the same supply and demand flip. Okay, so we see it flip away from the supply right here. Okay, so we have imbalance right here and we still have a fair value gap right here. So if the price trade into the area of demand, we have to do what? Get to see our confirmation entry to execute our buys, and we take profit on this high. So that is it. That is how I do my analysis, and based on I love doing the swing trading and stuff like that. So these are how I execute this is how I just do my trades, and trading a beta risk to reward ratio. Okay, so starting from your higher time frame, you do assess your structure and your liquidity and stuff like that. All right, then you wait for what? Price to get to your point of interest, and you wait for your confirmation entry. All right, so it will minimize your losses and increase your wins. So looking at GBP USD, we do know that we haven't seen this high broken, though we do have this other block resting here, or demand resting right here. So we only get to see price give us what a confirmation trade. So since the festive season, I'm just sitting watching the market. Monday, anything crazy, not trading, has the price do what liquidate. So see you guys next year, and I promise to always, though it's not a promise, but I'll try my best to drop updates on um, YouTube, and you guys can follow me up on my Facebook page where I grew $200 to sorry, when I grew $14 to $217. So I'm more active on my Facebook page because that's where I have fun than YouTube. YouTube is so lonely. So yeah, Demitron's FX trader. Let's see if we'll get to see something on Google. So we have Demitron FX trader. This is my YouTube channel, and then this is my Facebook page, and you can see my stuffs right here. Okay, so these ones in my stuff. So my stuff are the ones that came out first. So we have YouTube, and then we have my Facebook page right here. So you can see Demitron's FX trader, Demitron's FX trader, stuff like that. That's my Gmail, and yeah, I need to log in. Okay. I will log in with my account. So yeah, that is it. You can get to see the update right here in photos. Okay, so I'll have to first log in, but then you can get to see my updates. You can see these are the recent one I posted last week. So that is it. So you can check update and educational stuff on my Facebook page. That is where I post my education stuff and trades. So see you guys later on next time. Bye.